Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Shares in European defense firms climb after Putin declares partial mobilization. Investing.com shares in European defense firms rose on Wednesday after Russian President Vladimir Putin declared a partial mobilization of the country's military reserve to support the invasion of Ukraine. Military equipment producers including Germany's Rheinmetall AG, ETR, RHMG, France Thales EPA, TCFP, and Italy's Leonardo SPA beat LDOF jump following Putin's announcement earlier this morning, with expectation growing that his decision will further extend to 7-month-old conflict. Mobilization would be limited to those who have already served in the armed forces and who have relevant experience and training, Putin said. Oil gives up gains as soaring United States dollar offsets Putin's troop mobilization. New York reuters oil prices gave up early gains on Wednesday as a soaring dollar and globalization fears offset worries about a Russian military mobilization. A big increase in United States crude stock could also weaken oil prices. Analysts forecast United States crude stocks rose 2.2 million barrels last week, EAA/S. On Tuesday, data from the American Petroleum Institute (API) industry group showed crude stocks rose 1.0 million barrels in the week September 16, API/S. Brent futures were 10 cents or 0.1% lower at $90.52 a barrel by 10 to 13 a.m. EDT, while United States West Texas Intermediate WTI crude fell 28 cents or 0.3% to 83.66. Both contracts were up more than two earlier in the session. Putin said he had signed a decree on partial mobilization, saying he was defending Russia's territories and that the West wants to destroy the country. The oil complex advanced largely of Putin's apparent escalation of the Ukraine war. Analysts at energy consulting firm Little and Associates said, noting the strong dollar and expected higher United States interest rates will limit oil price gains. Oil prices soared a multi-year high in March after the Ukraine war broke out. European Union sanctions banning seaborne imports of Russian crude will come into force on December 5. Investors this week have been bracing for another aggressive interest hike from the United States Federal Reserve that they fear could lead to recession and plunging fuel demand. The Fed is widely expected to hike rates by 75 basis points for the third time in the row later on Wednesday in its drive to rein in inflation. The dollar was on track for its highest close against a basket of other currencies in over 20 years. A strong dollar reduces demand for oil by making the fuel more expensive for buyers using other currencies. Sign of the recovery in China's demand hit by COVID-19 shutdowns had also helped lift prices earlier in the session. At least three China state oil refiners and privately run mega refiners are considering increasing runs by up to 10% in October from September, eyeing stronger demand and a possible surge in fourth quarter for export. People with knowledge on the matter said. Meanwhile, the United States said that it didn't expect to break off on reviving the 2015 Iran nuclear deal at this week's United States General Assembly, reducing the prospect of a return of Iranian barrels to international market, or about 3.5% of global demand. The shortfall highlights the underlying tightness of supply in the market. Okay, maybe that's all from me. Don't forget to like, comment, share, and subscribe.